Naina Lal Kidwai, Group GM and Country Head at HSBC and President of FICCI, joins us right now on the show. Good evening, Ms. Kidwai. Thanks so much for joining in. What are your views on the current growth inflation dynamic? And in that backdrop, do you expect Governor Rajan to keep rates high for some time to come?
It's a very tough balancing act that the governor has. And I have no doubt that he is sensitive to issues around growth and around manufacturing and industry, where from a FICCI's perspective, we have impressed on him repeatedly that there is an issue around high interest rates, because in every survey we have done of industry, the factor that comes out right on top as a deterrent to growth and investment is high interest rates. Now, it is therefore something that he has to keep in sight if investment has to come back. However, high inflation also is a deterrent to growth, and therefore he needs to somehow magically really sort through the inflation issue while allowing interest rates to come off. And I think for him that is the dilemma, that is the balancing act which he is going to have to manage.
Afternoon, Ms. Kidwai. I just wanted to talk about some of the other pointers. You know, we've seen a couple of leading banks hike their rates recently. Do you believe that corporate and retail customers need to come to terms with higher rates as now the new normal?
Well, certainly as the rest of this year is concerned, those rates are here for us to see. And there doesn't look like a reprieve coming from the banks in terms of lower interest rates. But the next and early part of next year may begin to see a little more liquidity in the system. A lot will depend on government's own borrowing program. And if that liquidity filters through the system, as deposits go up, as NRI schemes, which are helping in terms of the deposit growth of banks, begin to take effect, we may get that advantage filtered through to corporates. But it is going to be key to keep an eye on the interest rates charged by banks to corporates.
Ms. Kidwai, what are your views in terms of the US Fed's tapering of the bond buyback program? It's on the top of the mind. How soon do you expect it to happen?
I think it's widely believed that QE tapering is going to be a mid-2014 event and that it will be gradual. And the good news here is that because we had the sharp lesson we learned, particularly in terms of the way our exchange rate, as in the rupee, depreciated on the announcement the last time, that we are much better prepared today than we were over the roller coaster ride that our rupee saw a couple of months ago. So you have seen the strengthening of the rupee. A lot of it has to do with the way the RBI and the government have reacted to the exchange rate management. But there's also a huge confidence today in terms of the current account deficit not leaving us as vulnerable as it looked, because you will recall it had soared to levels of 4%, which is what also demonstrated that we were vulnerable and not able to counter the effect of a QE tapering. And that has been brought into check with some of the measures.
Now, moving on, we've also seen the rupee lose ground, particularly today as it weakens against the US dollar after we had seen that bout of stability. Is that a concern from the industry perspective?
I think the rupee volatility is a great cause of worry because it brings mark-to-market risks onto balance sheets. It creates fears in terms of both the import side, and many companies have large import content, and also yes, it helps those that are large exporters with low import content. But even while it will help in the longer run, volatility doesn't help an exporter or an importer. So having a managed rupee is a lot better than the volatility we see. And the announcements really around the recent depreciation again have been around our oil import impact, because as you know, the settlement of oil bill in dollars was taken off the system, and the concern is that as it comes back into the market, it will cause some of that volatility. So I think this needs to be carefully managed, and the messaging that the market gets, whether from the RBI or from government, has to be clear and giving direction so that there are no surprises. Because it is the surprise factor that really impacts volatility and impacts the rupee and its parity with the dollar in a manner which is not favorable to us.
Could you give us your thoughts on the new norms that the central bank has released on the foreign bank subsidiaries and the subsidization issue, rather? I mean, is this something that a bank like yours would gain from?
So, as you know, the bill was really only published last night. I would like to study it better and come back to you with my thoughts on this. But it is a document that has been long awaited. There's a lot of information in there, a lot of change from what was the original discussion paper. So let's leave that for another day.
Sure. Okay, Ms. Kidwai, it's been a pleasure having you with us on the show. Thanks so much for joining in with that exclusive conversation and sharing your views.